Well, we're almost at the end of earnings season, but results still coming in. Tata Motors has reported a net loss of 944 crore rupees for Q2. Margins also missing expectations. Sonia standing by with the Tata Motors report card. Sum up Q2 for us, Sonia.
Well, you know, these numbers are definitely lower than what the street was estimating, Shireen. So if you look at it, it's a net loss of 950 crores. The poll was 248 crores. You generally can't go by what the poll suggests because, you know, there's a big forex elements that Tata Motors has in its business. So the net number always varies. But even if you look at the core EBITDA performance, right, it is below what the street was estimating. The EBITDA has come in at 5,572 crores. The poll was 8,330 crores, and the expectation this time around was that things will definitely improve both for JLR and the domestic business purely because of a low base as well as an improvement in the semiconductor supply issue. On that account, the margins at 7% are lower than the poll of 10.2%. Although on a year-on-year basis, there is a little bit of an improvement that we've seen. Now, I was just going through the press release for, JLR, and the JLR business, the core numbers are not too bad if you compare it year-on-year. The revenues have come in at 5.3 billion pounds, which is a growth of 36% year-on-year. And there's a strong model mix and pricing with the wholesale volumes going up 17.6%. The problem really is that the JLR business continues to be loss-making, and that's because of the forex element as well that I was referring to earlier. Even in the passenger vehicle business, it's a good growth that we've seen, 71% growth that we've seen on the top line because of an improvement in the, wholesale volumes because of the success of the new Tata Nexon. The electric vehicle volumes have done very well. But on the bottom line as well, the numbers are slightly below what the street was estimating. So let me toss this question across to Ashwin Patil, who is joining in. Before that, the commentary from the management is quite positive. They do say that the demand continues to remain strong. However, a key monitorable in the wake of global uncertainties is if the improving chip supply and the cooling commodity prices, that will definitely aid revenues and margin recovery. And hence, they aim to deliver strong improvements in EBIT and free cash flows in the second half of the year. So the commentary is strong, but yes, the core operational performance is below street estimates. We have Ashwin Patil joining in. Ashwin, what did you make of the initial numbers and what do you see as the movement of the stock here on?
Well, I think that, the Q2 numbers were definitely below our expectations, but they were mainly plagued by the currency losses that the company has faced in this quarter because of, severe depreciation of the rupee as compared to dollar as well as the GBP. And though the volumes have been good, but they couldn't percolate into the profitability. First of all, because of the currency, as I said earlier, as well as the input cost impact has not been felt up to that extent what it should have been felt. So, the impact of that, most of the auto OEMs are reporting margins which are not really very satisfying in Q2 where they should have been there. But now going forward in Q3, the impact of that should be felt very well. And also the chip shortage issue is also getting resolved up to a good extent, as most of the auto OEMs have cited. And also the volume performance has been good. JLR improvement is there on the volume front, as well as in the domestic markets. We are seeing a good traction in the commercial vehicles as well as the passenger vehicle business. So going forward, I think there is a lot of positivity in the stock. I should definitely agree with that. And maybe, with the results have not been really very well, in line with expectations. So some sort of reaction will be seen tomorrow in the stock. But going forward, I think on a long-term basis, on a one-year time horizon, I think that the stock can be bought at these levels.
Okay, thanks a lot, Ashwin, for that. So just to summarize, Shireen, the numbers are below street estimates. As Ashwin is also pointing out, it's the forex element that once again has hit the numbers. Consolidated net loss, JLR has posted a net loss, but the management commentary is positive. Also, just a word on the stock, while the entire auto sector has performed in the last 12 months, Tata Motors has been languishing. A year back, it was 500 rupees. The stock right now is 433 rupees. Perhaps pricing in this delayed recovery that JLR is seeing because of the forex issues as well as problems in pockets like China. So there may not be too much of a downside tomorrow, purely because, a lot of it maybe is in the price, and commentary from the management is good. But yes, these numbers are definitely below what the street was estimating. Back to you.
Sonia, many thanks for joining us. That's a quick snapshot of Tata Motors' Q2 performance. As Sonia was pointing out, hit by the forex element, under what the street was expecting. Now to the stock market action. Profit booking being seen on the Lal Street today. The Sensex and the Nifty dropped about 1%.